Good afternoon. Welcome to the market close. Today's the day. We had our first rate cut, 25 basis points coming off of the overnight prime rate. And yeah, well, I called June for a long time. I thought it was going to be June. I did, in all fairness, I did switch to July last month because it was really looking like it wasn't going to happen. But it did happen. It did happen. I second guessed myself, so I'm technically wrong. So we'll leave it at that. So we have our rate. What happens next? I don't know. For me, I put up a sign. So if you notice, we got the new Mountain Finance sign up on the wall there. It's like neon, and I can do any color under the sun. So now on green days, we'll have a green Mountain Finance. On red days, we'll have a red Mountain Finance. So I haven't figured. We'll pick a random color on the weekend. So we'll have fun with it. We'll have fun with it. Nonetheless, all right. Whew, what a day. Let's get right into the market. Let's see where things are right off of the bat. All right, we're pulling this up over here. So as you can see, the TSX up in the green. It's up 0.66%. We'll take it. We'll take it. It's green. The S&P 500, they're up 1.01%. NASDAQ is up 1.79%. And we're gonna look at why in just a moment for that. Gold is up 1.18%. Silver's up 1.7%. WTI, West Texas Intermediate, up 1.64%. And Bitcoin is up almost 1%, a little bit shy. All right, let's take a look at that Canadian market. We're going to see some green on the market this time around. We don't have as much green as I was expecting, to be honest. But we got TD in the up 0.51%. Bank of Nova Scotia, they're up 0.65%. We got both railroads are just slightly up. So they're up a little bit. Tech B is up. Shopify is up a full percent. It's nothing too big, but we do have some reds. Like look at this Nutrien over here. They're down 2.63%. Great West Life, they're down 3.06%. So we do have a little bit of mixed bag. And I know once we get to the chat, I did see a couple comments in there about, I'm underwhelmed. I thought the market was going to explode big time because of the rate cut. Well, to be honest, it's already been priced in. Everybody and their dog has been expecting this rate cut on today. Everybody and their dog, but not me. I was still on the July thing. So, it was already priced in. What this has done, though, is this has taken a lot of that instability that we've been having the last couple of days. Well, more than pretty much the end of last week into this week. All of that red, a lot of it was basically people fretting over this rate cut. And now it's here. And we're going to talk about that. We'll talk about the rate cut here in a bit. Let's look at the U.S. Or sorry, I guess we'll look at I always forget, I added the ETF one. Over at the ETF one, we got a lot of green. VFV looking nice. So Vanguard's up there. Some of the XEFs, XSPs, XIU, all looking pretty darn good. So that's not too shabby. And those of you who are looking and saying, wait a minute, why is TD in the ETFs? Well, we'll open it up. This here is actually the TD Global Tech Leaders Indexed ETF. So it's not actually TD. It's actually a tech. And look at this. they're doing pretty much the opposite of what TD is doing. And we'll talk a little bit more about that too, as I sort of hype up the next video that's coming out, which is the whole my bank review. Oh, and before we go any further, before we jump into the US, I did promise that I would give you guys an opportunity to win another market close for Friday. So we'll just do the standard thing. If before the end of today we get 4 supers of any kind, we'll do Friday. Simple as that. All right, let's move to the US. Here we go. So look at this. Look at Nvidia. And this is what I was saying. Nvidia is powering the NASDAQ. So when you look over here and you see the NASDAQ up 1.81%, well, let's take a gander at Nvidia. Look at this. Look at this. They're doing it again. They're now up. What was it, like a week and a half or so ago that we were all going, we hope they hit 1,000. Well, now look at them. They're at 1219, 1,219. They're not stopping. They're just going. And I'll tell you, the other day, somebody showed me something. Let me show you guys this. Let me show you guys this here. All right, that's a stock screener. We need to come back here. I just need to remember what the name of it is. But give me 1 second here. We will find out here. All right. Well, first of all, I'll show you one thing. Let's start with this YNVD. All right. So this here is the Nvidia Yield Shares Purpose ETF. Watch this. Just take a gander. We'll come out here to the 1 year. Look at this. This is an ETF. They didn't launch that long ago. And holy banana bread, they've gone from, well, let's see, right down here, $29 to $39, pretty much since, well, when was this? April. Since April. That's not too shabby. That's not too shabby at all. So yeah, it's one of these things. You know, if you're bullish and you think Nvidia is going to keep going, there's a lot of different options, a lot of different ways that you can certainly get in on it. But I just wanted to show that one because I thought that one was really, really, really kind of cool. Oh man. There was another one too, and I can't remember the ticker, and I won't look for it right now. I'll show you guys next time. It's basically, there's actually a 2x bull for Nvidia that somebody had pointed out to me in the comments, and I was looking at it and I was like, holy banana bread, the amount of money that you could have made if you had gotten in. But it's dangerous, really, really, really dangerous, because, you know, you can gain 2 times on the way up and you can lose 2 times on the way down. So you have to be a little bit careful with them. I always look at anything like that uses leverage for me, especially when you're looking at 2x. That to me is going to be a strategic play. There's no way around it. And I'm going to be nervous the whole time. The whole time I'm in it, I will be nervous for sure. All right. All right. There we go. Let's move back now. We were in the US, right? So that was Nvidia. Let's pull this back. But Nvidia has just done fantastic. Most of tech is looking good. You got Meta over here. They're up 3.77%. I think Meta is behind my head. Microsoft's up 1.66. Apple's up a little bit. Amazon is up. Even Tesla, not by much, but they're up a tiny bit. So you got to give them a little bit of credit. All right, let's go and look at our cryptocurrency. This is looking good, looking pretty healthy. We got a pretty green day going on. Bitcoin up 1.16%. Ethereum up. Yeah, look at this. Now, Solana is up. Even Shiba Inu is up. So not too shabby. And then probably some weird coin I've never heard of. Oh, let's take a look and find a coin I've never heard of. All right, here we go. And this one, no, we'll go to this one. Joe. There we go. Joe is up. I've never heard of Joe. I don't know what Joe does, but maybe it's just a cryptocurrency that Joes use when Joes meet up. So it's part of the Joe Club, maybe. I don't know, but yeah, There's a bunch of weird ones. There's so many, so many. And I think we were mentioning the other day, there's like more than 14,000 different cryptocurrencies. I'll stick to the ones that we all know. Let's be a little bit fast, a little bit safe, not fast, but well, fast and safe. Okay, let me pull this back down. Oops, I'm just gonna click here, bring back me. Let's get caught up in the chat. Holy banana bread. All right, first comment right out of the gate. Marco is, I'm disappointed with today's rate cut. Absolutely. And there's people who are disappointed for a lot of reasons. You have people, for one, that were expecting the market to go crazy because, oh, rate cut, it's going to make everything go wild green. It's going to be a fantastic day. Everything's going to recoup everything it's lost. Then you got people on the other end who are like, we shouldn't be cutting. We should be waiting till the U.S. cuts. You know, those are the people who are concerned about what's going to happen to the Canadian dollar. Well, I'll show you right now what's happening to the Canadian dollar. Just give me 1 second. I gotta bring it back up again. All right, I did add this here. This is our Canada US. So right now, $1 US is worth 73 cents Canadian. It was down around 72 cents, I think, earlier, like almost 73, but it hasn't really changed. So I don't think this is something that's going to happen. And in a lot of the interviews I watched today with Tiff Macklem, he was saying, you know, we have quite a bit of a buffer room before we really have to even be worried about that. And, you know, so I don't think that 0.25 is going to do us in. Even if we went to 0.5, I don't think that's going to impact that. But now there are other people and they have concerns. And some of those concerns are, well, what's going to happen when the housing prices start going back up? What's going to happen if inflation rears its ugly head again? Because we took our foot off the gas a little bit too soon. And I think that's actually a concern for the Bank of Canada. So for that reason, I don't think if they cut in July, I would be shocked. I would almost think they don't know what they don't know what they're doing if they cut in July. You just want to let's just sit on that 0.25 and coast at least until September. Let's see what happens. Let's see how economic data is going. Now, in their speeches today, Tiff Macklem did make it clear that, yes, they think right now, the way things are going as they are right now, we're looking at multiple rate cuts. There's going to be more. But he also said that if the data changes and things, you know, kind of go the opposite way, then they'll have to sort of go meeting to meeting to determine what they're going to do. It would not. I think people would absolutely lose it a little bit if all of a sudden we had to hike back up again. But we're not going to go down forever. We're not going to get anywhere near where the pandemic is. You know, it's going to be fun. It will be fun. Watching what happens and seeing how this is all going to turn out. Now, the other aspect as well, and I'll bring me back up, is that one of the things when you start thinking about the interest rates coming down, well, there is a little bit of a gap, right? They knocked down the interest rate by 25% today. That doesn't mean that instantly everybody's got 25% more money that's not going to debt right now. It takes a while to filter its way into the system. So we're going to see some of the positivity when it comes to companies, for example, with really big debt loads. That's going to filter in. It's not going to happen right away. So it's not a situation where take the Canadian banks. All of a sudden, because we have the rate cut, they're not going to instantly jump up, big time. They've already been moving. Most of them have been moving upwards, but it's going to be fun. And we'll sort of have to watch. I'm just paying attention here to the time. If I look like I'm distracted, it's because the clock's right there and I'm trying to find out, I don't want to miss it. I don't want to miss the bell. So we have to see. 9 was also disappointed with it. And here's Trevor. I think a little premature. So yeah, I mean, I personally think they should have waited till July. Just give this one more month. Give us more data to make sure things are still moving in the right direction. But now that they have done it, whatever you do, Bank of Canada, do not cut further in July. Let's wait till the fall, see what happens. So let's see what happens to the U.S. as well. Oh, that's me. Who cares what I had to say? That's not important. Marco says, egg on their face when inflation kicks up again, then they have to raise the rates again. It could happen. It could happen. So that's one of those things that we have to sort of take into consideration. If it does happen, those of us who are, those of us here, we'll be like, okay, yeah, well, that's what they had to do. But a lot of the people who don't really understand stuff like this, all of a sudden the rates going back up again, they're going to be like, they're not going to be happy. It'll be a very unpopular move. All right. Vinit's in the house. Hello, Vinit. And we got Bence here saying, any idea how Lululemon is going to do this afternoon earnings-wise? Well, let's take a look. Lulu. Good old Lulu. Let's see here. We'll bring us back in here. Let's go over here. Oh, wait a minute. Wait a minute. Ha-ha. Got it. Woo-hoo. There we go. We got the bell. All right. And you were looking at, let's see here. LUL. Let's see. Lululemon right here. All right. So they're doing it. Are they doing this today? So here we go. They may have already reported. So I might be looking at this. Oh, look at this. This is not fantastic. Normally, yeah, so they've been moving down during that period. They've had a little bit here. I'm gonna say that their earnings are probably not. Just looking at that, I don't expect that alone makes me think, maybe not. Let's just take one quick look at something else here in their key data. Now this here is good. They've got a really good return on equity. They've got a really good return on assets. I don't like the fact that their share price has been dropping, but some of these other things are looking healthy, and they also don't have a ton of debt. So that could go really well for them. What we need to know is we need to know what their profits are going to look like. So I think with Lulu, it could go either way. If they do exceed expectations, because you have to realize too, and I'm going to put this in because a lot of times people don't think about this. Sometimes people are going, okay, their expectations are A, so they have to exceed them. But sometimes that expectation might actually be a share price that has fallen because that's kind of where it was expected. It just means that they may not have fallen as far as everybody was anticipating. And that can still be an exceed. With numbers like these, especially with the return on access, like return on equity. Sorry, I was looking at assets when I said that. Well, even the return on assets, 24%. Those two are amazing numbers. So I will say right now that I think they're probably gonna. I think they might actually exceed, not by a lot, but they might exceed just from looking at those. And that's despite looking at, as I said, this here. This is just that 6 months. So that quarter is going to be right in here. I think there's a chance. Well, here it's not like that's not so bad. It really boils down to this part in here because they should have also had March included in this list. So they're going to have to deal with that. This part, not so bad, but this part, a little bad. So let me know, Bence, if you're watching them on the side, let me know how they do if it pops out before we're finished here today. Mary's in the house with a hello. Speaking of the hello, well, not really the hello. Make sure you guys slam that like button, turn it blue. Let's push this out to everybody on the interwebs today. And Jackie's in the house. Ooh, nice green sign. Impressive. Oh, thank you. Well, I should bring me back up as I'm reading these. There we go. Yeah, it's kind of funny. I'll tell you the funny story. I mean, it wasn't even my idea. It was Jill's idea. I was apparently she was watching, I think, The Plain Bagel, and he has some kind of a sign. And she's like, well, he has a sign. Candace should have a sign. So she bought it. So I'm like, okay, I'm sure. Why not? So that's kind of cool. Ben says Dollarama is wow. Yeah, Dollarama has had some, they've done well, but they did start to fall a little bit last day. Bence, you keep making me pull the thing up here. Let's go back here for a second. Actually, we'll go to the stock heat map. We'll pull up Dollarama. So yeah, look at this. So they had this big jump, which was fantastic. And then they had that little bit of a slag there on Friday, but now they're making that back up. So that's not too shabby. Not too shabby at all. All right. Well, it's like we're going back and forth. Big head, little head, big head, little head. So green like that sign. Exactly, exactly. And Meow loves the sign. Marco says, I thought the banks were going to rally on the rate cut news. No luck. Not, yeah. I think once again, if everybody was anticipating, so let's just change the narrative a little bit. So the market was pricing in a 25 basis point cut. The banks were prepared for that, and everybody's that's what everybody was expecting. But let's say this morning, instead of a 25 basis point cut, Tiff Macklin opened his mouth and out came 50 basis points. Well, that would have been a catalyst, because that wouldn't have been priced in. So that would have definitely caused a lot of interesting movements in the market. All right, Roku Stittsville is in the house. It's pretty hot out there, eh? It's really hot here today. I've got the AC going in here as well. So yeah, absolutely. 9 is thinking of buying an iPad for my banking brokerage device. Does the Wealthsimple app and banking apps work well on it? I've only used Android products. Yeah, iPad works fine. I do actually, with Wealthsimple, I do most of my Wealthsimple on the iPad. So that works absolutely fine. I haven't really tried at least the National Bank. I haven't tried that on it, but I imagine it might work well. I can't see why it wouldn't. Actaz says, I still think the rate cut is too early. Yeah. And I think there's a lot of people in that camp. I think there definitely is. Now, here's the whole thing, though. Once we get around to the other side of this, that's when we'll really know whether or not the Bank of Canada pulled it off at the right time or not. But we'll see. But yeah, I mean, I think I would agree. I would have waited at least till July. But here's the thing: if they only do this one, I think we're going to be fine. Don't do another. Let's just wait and see what happens. Make sure everything is still moving in the right direction. Give this one a chance to filter into the data. Ben says, so happy I own RY since it was around 115-ish, keeping for long term. Yeah, exactly. I mean, all of the banks are really, really good. Let's see. VFE hot, another 52-week high. Yeah, exactly. And remember, I know that's at the top of the list here on the ETF. VFV right here. And here, see, look at this. They just keep on creeping on up. So not a bad ETF. It's definitely one of the Vanguard ones. I think is great for especially for new investors. Like when you're learning the market and learning about investing, this is a great one to throw your money in. And you don't have to worry about it. You know it's going to go up. And then, you can start moving your money out of it, or you can even stay in it. Some people stay in it because it's just a fantastic ETF. Okay, we'll pull this back down. And exactly. Oh, it's time for the coffee. It's actually funny. The other day, I think I only had 1 or 2 drinks of coffee through the entire stream, because I finished the stream and it's like, oh my God, I now have almost a full cup of coffee to drink. So cheers, everybody. I will drink hot beverages on a cold day or a hot day. Some people won't, but I drink hot beverages on a hot day. I'm in that camp. Al Bundy's in the house. Woot, Nvidia. Absolutely. They're going to hit 1,300 at the end of Friday. Ooh, we got a prediction here. Very interesting. Now, keep in mind, on this week, we didn't do a prediction. We got ChatGPT to make a prediction on which 2 stocks were going to do well this week. And they came up with, what was it? Enbridge and Air Canada. So next Sunday, I'll come to the stream on Sunday, and we'll know. I'll find out what the total return is on both of those for that week. for that week. And we're going to do that every week. I thought that was kind of fun. Somebody came up with that idea, and I was like, yeah, let's do it. Nvidia is great, splitting, and even more people can invest into them at lower prices. Yeah. Also, the big thing with the 10-to-1 split too is it brings that price down to a reasonable amount so that they can actually people can actually play options on them. So that will definitely create a whole bunch as well. Prairie's in the house. I'm late to the party, but I'm here listening in while I work. Happy Wednesday live close, everyone. And Jonathan says, I made it to the pre-bell. Candace called that rate cut. Ding, ding, ding. All right. And let's see here. 60.03. The bell, we're there. Yeah, we made it through the bell. 9 says, my massive QQCC position is now worth $3.08. Holy banana bread. It's getting there. It is getting there. Amvas has found EQCL Global from Covered Call ETF Investing YouTube. Who has found EQCL Global from Covered Call ETF Investing. Okay, I know the channel. Jordan, I think that's Jordan, who has detailed CC ETFs list. Appreciate your thoughts on this ETS, and is there a free Canadian US ETF list for reviewing? We don't, but what we should do is we should just do one on Discord. We could all start putting our favorites in there and maybe categorize them or something. Let me think about how we can organize that, but I think that would be fantastic. So EQCL, let me pull that up. I thought that one was in my video on leveraged funds. I think it was at least one of the ones close to it. But yeah, let's pull it up. All right, EQCL. No, that's the Discord, folks. Where the banana bread is my thing at? Oh, it's all the way over here at the end. Okay. EQCL. And here we are. Yeah, I definitely covered this one. The Global X Enhanced All Equity Asset Allocation Covered Call ETF. First of all, let's just get a couple basics. You're looking at an 11%. So 11.7% distribution yield. It's a monthly dividend, 21 cents a month. So not too shabby. When we look at the last year, it hasn't been around a long time, but you can sort of see it opened at $20.14. It's now worth $21.67. So you are getting some growth and you're getting that really good dividend on there as well. So that's not too shabby. And just to sort of put this out for anybody who's interested in that, let's see here. All right. So their next, well, you kind of just missed their last ex-dividend day. So, you know, basically your ex-dividend day is the day just before the record day. So it would have been on May 30th. But yeah, you just missed that. But it comes every month. So, and as you can see, they've been pretty reliable. And they've actually increased their dividend. They were at 19.5 cents up to 21. So that's not too shabby. Now, those of you who are wondering, but wait a minute, what the heck does EQCL look at? Right down here, I think it gives us a little bit here. No, it gives us nothing. It gives us nothing. But it's mostly all equity. So it's basically, it's like taking an XEQT and then throwing basically covered calls and leverage on it, pretty much. Jonathan says, yeah, Lulu is a great company, but the fashion industry is not an investment for me. Not a problem. Mohammed says, hi, Candace. Any thoughts on VZ? Let's pull up VZ here. All right. So that's Verizon, so communication sector in the U.S. Now, the last time I looked at them, they had a lot of debt, but let's see how they've been doing recently. Well, they've been doing better than our three, that's for sure. They've definitely had a little bit of a movement up, which is fantastic. Whoops, I'm sort of scrolling things too fast. Their yield's not bad, 6.4. Now, if we take a look, I want to go back out to about the 5-year here for a moment. And you can see that normally they're up about here. So they're down just like all of the telecommunications have been. but they do seem to be already recovering. One last thing, I want to take a look and see how bad their debt is. All right, if we come down here, yeah, it's still pretty high, still pretty high. So it's 187%. So basically, for every $1 of assets they have, they've got $1.87 of debt. So that's still a little high on the debt. But things. Well, I guess with them, they're not getting rate cuts right away. They might be lucky to. They might see one before the end of the year, depending on what some of these next few CPIs are going to look like. So there's absolutely no way I think that the U.S. will cut a rate before the summer's out. I think that's a 0% chance. So so yeah, with Verizon, I would say they're probably okay. Just temper your expectations with them. That's what I would say. Temper your expectations. All right. Whoops. Let's remove that one. I almost removed myself. That would have been funny. 9 says QQCC seems to be one of the few CC ETFs that can actually go up and to the right, share price wise. They have done really, really well. So just to give an idea here, and I'll show you guys this. Why not? Holy cow. I just keep on pulling this up over. I should almost, one of these days, this is one of these days where I probably should just absolutely leave it. But anyway, I just want to pull this up here, and I want to look here at, actually, I'm going to go with a 3-year. Now, here's this interesting thing. QQCC, they actually used to be something different. That's why you see this. Sometimes you'll see something that looks like this, and you'll be like, what the heck? I remember looking into QQCC, and one of the things that happened is they basically repurposed this ETF, and then they went to basically start tracking the NASDAQ. But you can sort of see here, this is here around the time that the bull market, the bear market in tech ended, and tech has been on fire ever since basically the beginning of 2023. And yeah, QQCC has been no different. They've moved up from $9 to $9.20 to $11.89. So they've been a good total return for that. Now, there's also you can take that same one, so QQC, and put an L on it. This is the exact same ETF, but with leverage. And this here, of course, is brand new. Let's go to we'll go to the 6 month here. We'll go to the 1 year. Here we go. So they started up right about here on October of 2023, and they've been moving up. But now you'll notice how these little lines are much bigger than they were with QQCC. That, my friends, that's leverage. So leverage, when they do have a slight correction, they go down to almost, they go down more. Then they climb more. So you get a little bit more. You see a little bit more volatility in here. But when you look at it, when they opened at $20.10, and they're up to like $22.48. So definitely another interesting one. Now, here's the other thing. When you look at their dividend, it's higher too. So you're also getting more on that call on that side as well. All right. I swear I'm going to get caught up. I'm going to get caught up here. Good call, Jill. The sign looks great. Sammer's in the house. Here's BN. What do you think of the ticker Verb? Holy banana bread. I don't recognize that off the top of my cuff here. Let's take a quick gander. Verb, VERB. Okay, here we go. U.S. company, Verb Technology Company. All right, let's take a quick gander at that 3-year. Okay. They haven't moved in the right direction. They're also pretty cheap as well. So this is what I would call a penny stock. But let's take a gander at a couple things. We'll go into the key data. Holy banana bread. Negative 436.38, negative 165.85. So I don't like those numbers. I don't like what I've seen. So this is one that would scare me initially. But I would also be inclined to find out a little bit more about it. So let's see here. So they're a leader in interactive video-based sales applications. Okay. So this is one of these things where I would want to have a lot of faith in their product. If I had a lot of faith in their product, sure, I might throw something in, see what happens. But this is one I would absolutely, when they say you should not invest more than you're willing to lose. This is one that absolutely you shouldn't invest anything more than you're willing to lose, only because it is still a penny stock. Penny stocks, sometimes they can look like they're going to be the greatest thing since Swiss cheese, and they can still crater and go all the way to zero. Sometimes that happens. Sometimes it doesn't. Sometimes you lose your initial investment and you just never recover it in some cases, or sometimes you get really lucky and the company just absolutely excels, because look at it this way. A lot of big companies started as penny stocks. Well, it depends on how they approached it. If they built everything up private first and then IPO'd, then they probably didn't go through a penny stock phase. But if you look at them on the private equity side, at one point they were probably worse. They were probably worth less than a buck a share. So yeah, okay. Well, let's go to Marco. Marco. Here we go. Nvidia is the flavor of the month. Tesla before it, Apple before that, and so on. Yeah, well, I have a feeling with Nvidia, until somebody starts actually pumping out chips that are as good as Nvidia's when it comes to AI. I think Nvidia right now has that. Yeah, I'll call it a monopoly. They kind of have a monopoly on AI because of that. Not to say that the others aren't trying to get caught up, because they are. And it's going to be a situation where once somebody else starts moving in, it could impact Nvidia down the road. But I think right now they're still, if they're the flavor of the month, they're the flavor of many, many months put together. So I'm still bullish on Nvidia. And I think, especially for the rest of the summer, I think Nvidia is going to be, they're just going to do fantastic. I think just wait till we see what happens with this stock split. I think that's going to be really, really interesting. Al says, Marco, I like the flavor of the month. There we go. 9 says, glad I was buying T-bills before this rate cut. Was hoping for hikes for more yield. Yeah, absolutely. Marco says, I didn't say that was a bad thing. It's just having its moment in the sun. Yeah, and everybody does. Everybody does. I think Meet Kevin today had a video where he was comparing them to Cisco, and we all know what happened to Cisco. So not to say that that's going to happen, because I think one of the things I like about Nvidia, this is one of the big things I like about Nvidia, is they don't just sit still. They have what everybody wants, but they still continue to try to make it better. They still continue to innovate. And that to me is that's a sign of somebody who's going to stay on top longer than somebody who just sort of rides out the current technology that they have. All right. Al says, end of June 6 tomorrow, any holders of shares will get 9+ shares. Share so price will go up tomorrow, June 7th. All retail traders can buy cheap Nvidia, so price will go up again. 1,300, here we come. Yeah, well, technically not once we actually do the stock split. Is the stock split tomorrow on June 6th? Oh, I thought I don't know why, for some reason I kept thinking it was the 10th. But that will explain it. There's going to be a lot of people who will try to get in, because a lot of people get hyped when it comes to a stock split. So a lot of people are thinking, oh my God, when it splits, it's going to be worth more. Well, technically, no. The actual split, it will be worth exactly the same amount as it was before the split. But when you have that whole perception, that creates buying power, and that will sometimes push more people into buying, and that will raise the price. And once, of course, it becomes more affordable for people who don't have fractional shares, that's going to push the price as well. So it's going to be really, really, really interesting. All right. Ben says, my portfolio has a good amount of Lulu, been holding on to them for years now and want to keep them. Fair enough. Fair enough. Al says, hasn't Lulu been plummeting this year? I thought I read that a couple of weeks ago. Yeah, we actually looked at it a little bit earlier, Al. Yeah, they've been falling. They've been falling for sure. Ben says, Al Bundy, yes, but they should be good for the foreseeable future if you can hold on to them. All right. 9 says, I want QQCL trading volume to go up before I buy it. It was kind of low when I checked it out. Yeah, well, it's also new too. And at the same time, because of the leverage, that's going to scare off some investors. So it will, like, when you look at the volume of QQCC compared to QQCL, I don't think it will ever surpass it. So it's kind of one of those things that you kind of have to play with. So if you're looking to make fast trades, you probably, volume kind of can push you away if it's not high enough in that case. But, if it's something like, you're planning to ride it out for a while, then you're probably fine. All right. Ben says, going to listen to the earnings call. It's in 10 minutes. Nice. Vic is in the house. Market is nuts. BN says, thank you. We got Kevin in the house. Whoops. With a hello, everyone. What a great day with the rate cut. I can't believe I thought Nvidia was at 349. There we go. Mohammed says, I have another penny stock for you. CYBN. I don't care if I buy a couple of thousand and lose them all. That's the thing. If you don't care, and some people will do this. Some people will say, okay, I'm going to maybe I'll throw $1,000 at some penny stocks. I'll split it up to maybe 5 stocks or maybe 10 stocks. And I'll just, in case maybe one or two of them does well, and I'll make all my money back on those 2. And who cares what happens with the other ones? That's a strategy. Some people do use that. So now CYBN, I do not know who they are either. But let's take a gander. We'll take a gander. CYBN. CYBN. Bang. Okay, so Cybin. Makes me think. I think of cyborgs when I see that title. So they got to be a tech company. Let's take a gander and see what they do first. No, psychedelic therapeutics. Okay. I actually heard. I think Kevin O'Leary was involved in something like that. But let's take a look here. All right, so they did start off high. They're down around 30 cents. But yeah, what can you say? It's another. Once again, it's another one of these penny stocks. Yeah, negative. Usually the negative indicates that it's just not profitable yet. So though this is a field I know a lot of people are looking into. So maybe it will it'll have a chance, but it's still a penny stock. Ambas says, sorry, you did cover ENQL when I saw how when I saw how increased plus changes to this, I was intrigued. If global keeps increasing dividends in this market, is the CC plus leverage too risky? Thanks. It's a good question. Sometimes, and it's funny, like I actually had somebody who got mad at me, I think, on that video because I said there's higher risk. So let's put this into perspective. If something has higher risk, it doesn't mean it's risky. There's 2 different things. So higher risk simply means that there is more risk compared to, let's say, for example, a blue chip stock. With leverage, that list comes from the extra risk. It comes from the fact that they can move up and down much faster. So, for example, let's say if you're investing in something like this and it has a small correction, but it looks a lot bigger because you've got the leverage involved as well. That can trigger the whole fear, uncertainty, doubt. So FUD. All of a sudden you see a bigger drop and you're like, oh my God, I got to get out. I can't believe I did this. Help. And you sell and then it goes back up. And you're like, oh my God, I can't believe I sold. I should have just stuck in. I'm going to get back in. I don't want to miss what's going to happen next. And you get in. So you bought high. So you just basically you sold low, bought high. So you're doing the exact opposite of what you need to do to be profitable. So you have to, when you're looking at stocks like this, you really have to have control of, the whole fear of missing out and the FUD. So make sure that we're, you got that covered. That way there, you're not going to get yourself into trouble with those. And the other thing too is, and this is what I always say with leverage, don't look at it as saying, okay, this is going to be a long term for me. Maybe it is. Or maybe, now with these ones here, these ones are not so bad. But remember when I was mentioning as well about the 2x bull one for Nvidia? Well, yeah, ride that up when times are good. But, if all of a sudden things are looking bad in the market and it looks like tech is going to take some hits, you probably want to get out at that point. Or there's also, for example, there's inverse, like take, for example, HOD. So HOD is an inverse oil ETF, and it has leverage as well. I believe it's 2x on that one as well. So that one, when oil is falling, that's when you want to be investing, making your money. But as soon as oil stops falling, so let's say, for example, Joe Biden is like, yeah, we're releasing all this oil out of our strategic reserves, and flooding the market with oil. So oil's going to go down. You buy into some HOD and you ride it down. All of a sudden, as you're down towards the bottom of where it's at, OPEC comes out and says, well, we're going to cut production because we're not happy with these lower prices. Then you get the banana bread right out of HOD at that point, because it's going to go up. Because why is it going to go up? Or sorry, it's going to go down because oil's going to go up. Oil will go up, HOD will move in the opposite direction. So it's kind of one of these things when you're dealing with leverage. All right, I'm going to jump ahead for a second. We get a super sticker from Mary. Don't forget to hit the like button, Mary. That's her new nickname. So that's one, guys. If you do want that Friday show, we're looking for 4. We got 1, so we'll go from there. All right, let's get back to where we were. All right, we have Al Bundy again. I can't open the Money TMX site. Google is blocking me, saying it is not safe. Anyone really? How the heck is that happening? It's a safe site. You might be able to, with Google, like if you're going in through Chrome, I'm pretty sure somewhere's in their security, you might have to actually Google how to do this, but there should be a place where you can enter in safe sites to sort of say, yes, this site is safe. And then that'll let you go to it, or just try a different browser. I know I access it usually. Well, I access most stuff through the Safari browser. The only difference is I use Chrome for the StreamYard Studio, only because it doesn't work in Safari. But yeah, you should be able to enter it as a safe site. Prairie says, I read that Nvidia split takes place at close of trading on the 7th. Okay, so the 10th is the first trading day after the split. Okay, there's where the 10th comes in. Okay, because that's what I was thinking. I was thinking, at the beginning of the market on the 10th, we'll see all of these extra shares. So yeah, okay, that makes sense. So 1,300 before the split. I think it can happen. I actually do think it can happen. And let's see, Al says, oh, right, 10th is the first day. There we go. You have to have stocks on the 6th to be eligible to get the split. Okay, fair enough. Fair enough. Probably because the 7th would be the day of record. So they probably want you to have that for that. Okay. The 10th is also Apple's release for their AI plan. Yes, what is it? WWDC? So that should be very interesting. I'll definitely be peeking in on that. All right. And Beth says, for my USRRSP account, my small high-risk fund yield max is intriguing. Is why TSL in your radar because TSLA down, or is it best to buy at lows? Thanks. Okay. So there's 2 different things. Well, there's not 2 different things, but so with yield max does what's called synthetic covered calls. So what that means is that they don't actually own any. So if you have the yield max ETF for Tesla, they don't own it. They don't own any of it, but they write covered calls on it. And that's how they sort of pull all of this in. It's really kind of a complicated thing. I'm not sold. I'm not entirely sold on synthetic ETFs, only because it's hard for me to get behind something where there's nothing really there. But so far, they have done well. I mean, they have brought a lot of money in. But you also have, of course, you have the covered call one as well that Purpose does. So they have their Purpose yield one, so they're not too shabby either. But with the yield max one, having it in your US RRSP, that's a perfect place for it, because you don't want to be paying, you don't want to be losing 15% of that dividend. And it's a pretty significant. I can't remember what it is. I haven't looked at it in probably about a month or so, but I think it was. I thought it was like up around 20% or something. Well, let's take a gander. Instead of guessing, let's take a gander here. All right, yield max innovation. All right, here we go. So TSLY, this is their Tesla one. And where is it at? Oh, I'm way off. They're sitting at like 54% right now. Holy cow. Yeah, it's kind of an interesting thing. But when you go into the actual payments, one of the things you're going to notice is these payments are everywhere. So you'll notice 69 cents, 68 cents, 81 cents, 40 cents. And I'm thinking this is probably where I was thinking about the 20. 55. So it really depends on how well the fund is doing. So they do have sort of a sliding dividend in that way. So you're not always going to get the best, but you're still going to get a really, really good dividend. And then, of course, I mentioned as well, if we have the purpose. We get the purpose yield. And once again, seriously. All right, we'll just go YTSL. There we go. And with them, let's first of all we'll pull up the yield here. It's not even showing me the yield for whatever reason. Oh. Anyway, we'll figure that out later. Why is it not showing me the yield though? That's kind of bugging me. But let's come in here and see. And you'll see in this case here, once again, they do move a little bit, but they're just doing straight up covered calls, and they are holding Tesla. So when it comes to Tesla, the big question comes down to, how much further can they fall? Are they at a good spot? Are they at a good spot to buy? Probably. I think they're probably at a really good DCA spot. I mean, I don't think they're going to go back up like fast anytime soon, but I never count Tesla out. They always have this habit, and keep in mind, Elon is kind of trying to push them towards their AI side. So it's hard to say what's going to happen, but I do think that they're not done. I think there's going to be, I think they're going to go back up. So yeah, I would say yes. I would say yes, that it's probably not a bad thing to be looking at putting a dollar cost averaging position in on that. And you're going to get some half decent dividends too. So there is that. They have really good dividends. SMCI is the newest CDR by CIBC. Yeah, CIBC, they have a lot of these CDRs. So a CDR is a certificate of depository receipt. And basically what it is let's say CIBC goes and basically they'll buy a stock. So let's say, for example, let's say Banana Co. was a real company. They could go and buy a whole bunch of the US Banana Co. And then they could then create their own little shares, these CDRs, so certificate of depository receipt, and they'll sell you those. You'll still get all the same benefits and all of that fun stuff. So it is a way to get exposure to American markets in Canada. So it's not bad. It's not bad at all. I like it. All right. And we got good vibes saying hi. And Jonathan saying, how can anybody be mad at Candace? I don't know. Well, probably. I mean, maybe if let's see. If let's say you came in here and you were like saying penny stocks are the greatest. Candace, don't you love penny stocks? I'll be like, no, I do not. And then they'll be like, oh, I hate you, and then leave. It could happen. Actually, I will say one thing that I love about this community. We don't get a lot of trolls popping in. Back when I used to do the interview, so when it was Saturday Night Live Stream, we used to get the occasional troll popping in. But lately they haven't. So I don't know if that's just YouTube making it a little bit better. But I also have, I do have like I don't want to say a restriction on the chat, but it is set up to basically, if somebody comes in and starts spewing a whole bunch of profanities, it's probably not even going to make it into chat. I think YouTube will actually get rid of them before they even show up. So we have that. Kevin says, let's see, some people are very strange. Absolutely. Massive donation. Okay, sure. I'm always open to a massive donation. Let's see. Harold says, "Hey Candace, what do you think about CIBR?" Let's take a look. Let's take a look. Oh, I still have it up. So there we go. I forgot to take it back down. So CIBR. All right, here we go. So this is your First Trust NASDAQ Cybersecurity ETF. I'm liking the name. I'm liking the. I haven't particularly looked at this one, but the fact that we're dealing with NASDAQ, I do like. And cybersecurity, I think, is huge. I mean, it's getting ridiculous what scammers are doing. And I'll tell you a story I saw on the news the other day. Actually, it was Australia news, but this woman had been having a conversation with her bank, in text messages. And that was fine. It was a legitimate conversation. Well, along came a scammer and they spoofed her bank's phone number. Because they did that, they popped up in her bank feed. So she, in the middle of it, a legitimate conversation she was having, all of a sudden a scammer got in because they were using that number. And then they started saying, well, okay, we've been looking at your account. We noticed some unusual security stuff. Let's just verify everything, all your personal information pretty much. And we need to get a code number. So we'll send you a code and then you'll read it back to us. So basically what they did is they went to the bank and they put in the whole forgot password thing. And then it sends the code to the phone. But because they were already in her thing, so she got the code thinking it was from the bank, and it was from the bank, and she just gave the code to them in the chat, and then they went over, logged into her bank, changed the password, and emptied her accounts. Simple as that. So it's getting bad out there. You got to be really, 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 really careful. Here's the thing: banks are never going to send you a code and then ask for it back. With a person or even in a chat. They're not going to do that. They never will. So if you ever get in that situation, just don't do it, because those codes are meant for when you send a secure message back to the authentication server. They're not for an agent, ever for an agent. So always be careful. Larry says, sorry, I'm late. Is everyone ready for the yield max dividend? Oh, more people are talking about yield max. Holy banana bread. I know a few people are, Larry. I know a few people are. Change to spare saying happy green day. Yeah, absolutely. And pull this in. So those of you who are late, we have the new Mountain Finance sign up there, and it is green because we got a green market. But we can change this thing to any color. I'll show you, but it may be hard for us to get the green back because I'm kind of sort of figuring it out. Where did I put my remote? Oh, here's my remote. So I got my remote. So you can see everything under the rainbow is there. So let's, for example, if it were a red day, I can do red in here. There we go. We could go with a red color. Maybe if it's like a yellow day. So there's a whole bunch of different things we can do. Oh, and you want to see some fancy stuff? If any of you have epilepsy, look away right now. Oh, it just went green. Let's try this. Okay. Okay, well, there. Oh, we almost had it flashing. All right. I need to learn how to. Oh, look, there we go. There we go. So yeah, we can do this weird flashing thing. All right, I'm going to come back over here right now because I want the epilepsy people to come back. Come back. Wait, don't come back yet. All right, there we go. We'll stick with that color for now. Oh dear. So it's going to be fun. I have got to see if this thing can be hooked up to Alexa, and then I can get her to do it for me, and I can just tell her the exact color. That would be much more better. Ambas says, I've decided not to attend Blossom TO Tour and instead invest my budget in your membership. Do you have a member Zoom chat? Thanks so much again. It's not a member Zoom chat. What we do is we do have a every month we do a membership live stream. So it's a chat. It's a live chat type thing. Yeah, we do that once a month. Actually, the next one's coming up. Is it next week? I think it's next week. So we have to take a look, see what the topic is going to be. So it's just me and the channel members all in here. We chat, we talk about whatever. We'll go if you guys have questions, we'll go as long as we can. Um, and I'm also looking at ways to improve things. So, you know, maybe there's I've been thinking like maybe there's a situation where we could create like a private chat room or something, maybe over on the Discord for channel members. So little things like that. So you guys will, the channel members, let me know what you guys want, because everything you guys basically tell me, I do it. I do it. I find a way to do it for you guys. Larry says, I'm trying to get my yield max where I'm getting 3 to 4K a month, trying to do it by the end of the year. I don't want to work. You don't want to work. You just want to bang on your drum all day. That's fine. There's nothing wrong with that. Synthetic CC reminds me of synthetic CDOS from 2008. Ooh, that's an interesting comparison. Jackie says, what are your thoughts on hybrid notes? Interesting. ALCN. I haven't really looked at ALCN. You guys are just throwing, like, everybody's coming in with, let's find obscure stocks that Candace hasn't heard of today. That's okay. ALCN. Sometimes I discover some really good ones. No, interesting. It's not coming up, but that's fine. You said it is called hybrid notes. Hybrid notes. Let's see. There's a hybrid corporate bond. For some reason it's not coming up. So We'll have to find that one later and take a gander at it. Carol is in the house. Hey Candace, really hot today. Do you think that the Fed will lower its rate? Eventually, but not anytime soon. I imagine that definitely not in the summer. And it's going to come down to these CPIs. So they did have one good CPI, but that's just one. If they don't get a whole bunch strung together, I would say they would want probably three or four good CPIs in a row. And then if that happens, you're probably looking at a cut either just before or just after the US election. There we go. YTSL. There we go. 26.42%. I don't know why it wasn't showing up on my thing. Or sorry, no. TSLY is the one I was talking about. So yeah, so 26.42. Interesting. Well, here's the thing. That's what I was thinking it was. I was thinking it was in that vicinity. But whatever reason, TMX money is showing it as being higher for, I do not know why. Well, sometimes I will get some erroneous numbers in TMX, only because it's kind of doing the math on the fly. And sometimes if they do have 1 month where they do pump out a bit more, it pumps that number up bigger than it really is. And the chances of you getting that the next month are pretty darn slim. Let's see, Larry Max, Yield Max NVDY, 257. Yeah. Oh, and the MicroStrategy one, that one looks really, really interesting too. $3 something. Yeah. Let me show you guys this one. So, why? Let's see. Is that what it is? YMSTY? I thought it was just Misty. I thought it was just MSTY. Yeah, MSTY. Here we go. So this one here, this is the MicroStrategy. Now, when Bitcoin is doing well, MicroStrategy has so much Bitcoin that they are just absolutely, they're absolutely flying. So right now, this yield, where are we at? 115.897%. And that's just absolutely crazy. But well, look here, you'll see that they have, once again, this is going to be one, like this is another synthetic covered call, but it's one of these ones that are going to move all over the place. So their first dividend was like $4 and now $2.50. This is one where it's so new, you kind of have to see what happens. But as long as Bitcoin is doing well, MicroStrategy will do well as well. Actually, I think MicroStrategy has been outperforming Bitcoin, which is kind of funny. This one here hasn't been around for long, so you can sort of see it just started up back in February. And look at this. If you had bought in February, it was at $21. It's now $34. So not too shabby, not too shabby. All right. And bird construction. Bird construction up 5% today. Fantastic. This is a company, Bird Construction. I added them to the 0 to 100 challenge because I love this company. And I'll just show you, like, look at the last 3 years. As we move, like, this, everything is just kind of normal for a while, but now as we've been moving into much more emphasis on building and getting houses built, that's right up their alley. They do a lot of different construction projects, but look at them. They've just been on a absolute tear. So that's not too shabby. I wish I had gotten in down here when it was at $8, but yeah, I really wish I had. All right. 9 says sim swapping is scary too. Yeah, there's so many things that people are doing. Oh, I know. Oh, thank you. All right. Only a smart plug, but that's just turns it on and off. Oh, okay. Well, that sucks. That's fine. I will master this thing. I will master this thing. The flashing feels like a mountain finance malfunction. There we go. Disco time. Disco time. Ooh, I'm almost caught up. I'm amazed. AMVAS, when deciding on a stock ETF, does fair value have a heavy weighting on your decision? I wouldn't call it heavy. I definitely would not call it heavy. Looking at the fair value, looking at whether it's whether it's overvalued, undervalued, it plays a role. It plays a role, but no more than a lot of things. I would say some of the heavy hitters for me, depending on the sector, because it changes with sectors. So, for example, debt. I don't like to see a lot of debt, but if it's a financial company, I kind of expect that debt there. So I have different ideas. Because you take a bank, when you deposit money into a bank, well, they have this thing called fractional reserve banking. So they have to hold on to a small sliver of the money that you deposited. I think it's like 10%, something in that vicinity. But the rest of it, they just use. So, well, that means that basically, if you look at it that way, 90% of all the deposits are all instantly turned into pure debt. That's one of the reasons that when you look at a bank, they have a lot of debt. They're always going to have a lot of debt. There's nothing you can do about that. But that's healthy. That's a normal. That's part of what they do. And they also lend money too, but that's part of the whole business structure in the finance sector. So you will always have higher debt. Now, if you take a royalty stocks tend to have lower debt. And the reason for that is that, well, their business model is owning royalties. So basically it's like they're getting dividends from companies by owning, whether they own their name, whether they own, things like that. And when companies use that name, if they own it, they have to pay them for it. So they tend to have a lot lower overhead. Hence, their debt tends to be really low. So with that being said, if I find a royalty stock and it's got an incredible amount of debt, I'm going to look at it and I'm going to be like, I don't think I want to hold this. In the same idea, if I were to find a bank that had next to no debt, I would find that to be a little bit wonky. I don't even think I would want to hold that one either. So it's just something you have to sort of keep in mind. There's the whole idea is what you're looking for. Is you're not looking for, is any one statistic going to be that statistic that makes me want to buy a stock? What you want is you want to find a big picture. You want to get an overall idea. If you get the big picture, you're more likely to not make as many mistakes. Whereas if you just sort of look at one thing, then it's like, yeah, that's not one that didn't work out. And that will happen. And there's always going to be times. There will be times when you will find a company, the fundamentals look absolutely fantastic, and you're 100% okay going in, and you get in, and everything just turns to goo. It can happen. Bird is flying. Yes, absolutely. And that's a beautiful pun. It's funny. I saw that as I was talking to Amvas, and I was like, what's he talking about? Did he see a bird? Has happened. We've had birds get into the house because this one cat likes to bring animals in alive, and then he always lets them go. And so I've had to rescue. That's the best word for it. I've had to rescue some live birds in the house. All right. Amvas says, let's see, HMM.A was one of my first self investments this week. It went down 40 the next day. Wondering what happened. Thanks so much. It's an interesting thing. Now with HMM.A, one of their bigger issues, I guess, is they have a half decent amount of debt, but it's good debt. I mean, it's part of the whole expansion. So I'm still very bullish on both HMM.A and HPS.A. They have, even though they're separate companies and they do separate things, both of what they do completely complements each other. So for HPSA, they can come in and they say, okay, well, we're going to create all of your power transformers and stuff, but you're going to need enclosures for it. HMM.A, they make the enclosures, and we happen to, well, we kind of own that one too. So, it pulls it in nicely. They've got themselves set up really well. They're also like they're doing North America, but they've also expanded into India. And India is where they are basically building a lot of infrastructure, because as India tries to take advantage of the fact that they now have the most number of people in the world, and people are wanting to moving their manufacturing out of China, this is perfect for India. And to do that, of course, they need to pretty much build infrastructure. As a result, Hammond is at a situation where they can't even handle all the customers that they're getting. So they're turning away customers. So that's just something to keep in mind when you're looking at Hammond. So if they're down, great. That's a time to add. But I don't think it's going to be a situation. It's not a situation where they went up and now they're just going to go down and stay down forever. It just depends on the market. And I think rate cuts, so HMM.A, they'll benefit from the rate cuts just because, well, anybody who has more mortgage, anybody who has larger amounts of debt, that means that, less money to service that debt. And that's not a bad thing. Carol says, be careful with the Yield Max single stock ETF, especially TSLY. The value keeps going down. Yeah, and that's a thing. Where these, if you look at TSLY, so basically with a synthetic ETF, a synthetic covered call ETF, one of the things that does happen is that their price isn't 100% tied into, like, for example, TSLY, it's not really controlled 100% by the price of Tesla. So their price is going to be basically on the buying and selling pressure of that ETF. So as more people get interested and say, "Ooh, I want a piece of that pie," and start buying the TSLY, that does create buying pressure. So you can conceivably, if you have enough buying pressure, even if Tesla was going down, you could move that price up, or the other way around. Tesla could be going up, but if people were losing faith in TSLY, you could pull that price down. So it is an independent moving, but obviously when Tesla is doing better, people get more interested in something like this. So it does tend to move a lot like Tesla, but it can move completely up or down on its own accord. Jonathan says, often stock will go up or down for no good reason. Sometimes. And it's all about, well, I mean, everything works by buying pressure. The whole price. I mean, the reason that a stock, I should get rid of that and go big screen. Oh, and I should have coffee again. We're almost, we're getting into here, and there we go. Before we start heading towards the end, I do want to mention we still have that bonus Friday show up for grabs. We're looking for 4 supers. We got 1, so 3 more before we finish. We'll have that show. If not, then we'll be back, of course, on Sunday. On Sunday for this week. And of course, we do have a show. We have a video coming out on the banks, which is going to be really, really, really cool. Bismarcky says, did I miss anything? You missed an hour and 13 minutes of show. That's basically what you missed. And you missed me trying to play with the sign and getting absolutely crazy with it. So I'm gonna have to, I get my thing here. It's just trying to get the green, right? Like, oh, look, there's a turquoise, purple, red. Oh, there we go. We're pretty close. We're pretty close right now. There's one of these. There's probably some kind of pattern I can do that will get me there right away. So we'll see. Larry says, I'm debating purchasing a lot of yield max day before ex-dividend every month. Did it for the first time today, trying to see if it's worth just taking the dividend and running. Yeah, well, that's the thing. That's interesting because what will happen is when you look at the when you look at the day before the ex-dividend day. So on the ex-dividend day, that's when whatever the amount of dividend is that's being paid out, that amount of money is then deducted from the market cap. Because you're doing that, the simple math means that you're going to drop the price. So at the very beginning, at the very open of on the ex-dividend day, that price should be dropped by the amount that they paid out in dividends. So in a case like this where you have a big, massive dividend, that price should plummet tomorrow morning. And then you have to sort of wait, because that's why, there's this thing called a dividend capture strategy. And I've done a couple videos on it. So one of the things when you're doing a dividend capture strategy, in this situation, what you're doing is you're basically buying just before the ex-dividend day to get the dividends, and then you're going to move on as soon as you've recouped that. So if you have a stock, for example, if it drops the full price of your dividend, so you haven't made anything at open, but if it takes it forever to get back up, and normally if it's a quarterly stock, it takes longer. So normally if you're doing dividend, if you're doing like a dividend capture strategy, a lot of times you want to look at monthly stocks because they'll recover a little bit faster. So it's just one of those things. And sometimes what you have to do is take a look in the past, go back in the charts, look at the previous ex-dividend days and see how fast it took them to recover. And it might even be a situation like maybe, let's say you have a 20% dividend and you do a capture on it. So it opens and you'd be down that 20%. But halfway through the day, you might be only down 10%. So you could take it and move to your next target then, but then you didn't capture 20%. You've only captured 10%, but it's still money that you captured. So, it's kind of thing. I probably, one of these days, I will do an updated copy of the dividend capture strategy. It's been a long time, and they still get regular hits every so often. People going in and checking out those. All right. Better late than never. And Al is saying, I read that Royal Bank Direct and TD Direct are the largest two brokers in Canada. Any reason why they are good brokers that makes people want to have them as their brokers? It's not that they're good brokers or bad. I've not used them, so I can't really say whether they're good or bad. But they're two of the biggest banks in Canada. And if you're a regular person and you start to think about investing, especially before there were options, before you had like Wealthsimple and Questrade, and you pretty much would go to your bank. So for that very reason, a lot of people, before all of these newer brokers popped up, you were banking with TD, so you're like, oh, I'm going to do some investing. So you go into the TD investing broker. So by sheer fact that they're so big, that means you got a lot of people in there. Really, there's still a lot of people in there that, if they even knew, like there's a lot of people don't even know about Wealthsimple. They don't know about some of the other options, or they don't know that, they can get commission free over on things like even on National Bank. So there's a lot of people that just don't get it. And that's one of the reasons that they're the two biggest. It's just the fact that they're the biggest by convenience. That's probably the best word to say. They might be good, other than the fact that you're paying commissions. But this is one of the things. I don't know about these two in particular, whether or not they charge commissions on ETFs. I know, for example, I think I trade over at Scotiabank. They'll let you trade ETFs commission free. So, I think I wouldn't be surprised if they have some kind of a deals with depending on what you're trading, because that's kind of makes sense. A lot of times a lot. They're very similar. Did you know in the US there are no commission fees in any broker? Really? Ooh, that's kind of cool. That's actually kind of cool. That yeah, I did not know about that, but yeah, that makes sense. But keep in mind, I mean, I find this too. I mean, it doesn't matter what we're looking at, whether we're looking at our banks, whether we're looking at our communication companies. They hit with fees like crazy because they can, and that's because you don't have as much of a choice here. I think in the U.S., I mean, you have so much choice that you really can't charge fees because you'll never get everybody on board, and then people will just leave whatever bank to go or broker go to one that doesn't. So that makes sense. Amvas says, dividend capture video would be wonderful, especially now with yield max outstanding dividends. Is this strategy all right in the RRSP? Absolutely, yeah. I mean, you can do anything in your RRSP because they don't care, and the reason they don't care is no matter what kind of crazy thing you do in your RRSP, they're getting it. Everything's getting taxed 100%. The government loves it. You know, if anything, if you're like, let's say you're a successful day trader and you're doing it in your RRSP, the government is cheering you on. They're behind you. They're saying, "Come on, make more money. We'll get more taxes down the road. Make more money." So yeah, you can do anything in your RRSP, really. Let's see. Al says Canadian oligopoly on brokers. Yep, we do have an oligopoly on those poor brokers. Yeah. Although now we're starting to get a lot more. So, for example, since we've had Simple, Quest Trade, now we're starting to see things like well, Moo bugs me, but their funny thing is Moo is actually charging commissions, so it's kind of funny they came in. Now I think I know Moo has I think the people who are contacting me from Moo are based out of the U.S. So. But I heard as well that Moo might have some Chinese connections too. I'm not 100% sure on that, but I think it might have been. I don't know if it was Vic who mentioned that, but so yeah, we're starting to see a few different more. There's also Mogo. Mogo is out there as well. Larry says USA gets you with margin fees. Robinhood is 6.5%, but charges $5 a month subscription. Fidelity is 13.5%, but no sub fee. They get you. If they don't get you in one place, they're going to get you in the other. That makes sense. That makes sense. Holy banana bread. All right, guys, we're coming up to the end. If you get your final questions, drop them in. While you guys do that, let's pull up the Discord here. Here we go. Discord and the good old schedule. Here we go. So coming up, holy cow, I definitely need to update this. All right, so we have we just did this market close right here. Bang, all done. All right, so coming up, our next video is the bank review. That is coming out on a Friday. Channel members do get to see it one day early, so you guys will be able to see that tomorrow afternoon. We got our live stream coming up on Sunday, and we do have that channel member live stream next week on the 13th. So I'm going to probably put out a question before the weekend, definitely before the weekend, to ask you guys what you want me to cover in it, and we'll do it. We'll do it. It'll be fun. So that's what's coming up. Oh, we also have, I'm going to be doing the RESP video, finally. That's coming up on, on Tuesday of next week. So a lot of things to look forward to. And we're slowly getting closer to 4,000. So we'll have that that open to close live stream before you know it. So that'll be fun. That'll be fun. All right, we'll bring my head back finally. And Larry says, Al Bundy, I'll update on next show. I bought 1K shares of Nvidia and BTY. I am curious about one thing though. Just give me a second here. All right, I was just taking a quick gander over at Nvidia. Just put it over here so you guys can see. So right now in the after hours, they're up a tiny bit, up to 1232.63. So there's really no big catalyst for the after hour tradings this time around, but we'll see if we can get to that 13 by the end of the week. So that'll be fun. All right, here we go. You bought 1K shares of Nvidia. How much did that cost? That's oh yeah, that's a good chunk of change. So $31,000. Wow. Let's see. I never saw the 3K sub live video. Actually, the 3K one was a parody news show. I'll get you the link here. A lot of people just didn't watch it. I was like, really? And I had so much fun making it. So that was kind of cool here. All right, let me find it here for you. Boop-a-doo-doo. All right. Now, let's be a second here as I dig. Oh, there it is. I found it. I'm going to grab a link. Whoops. Not what I had meant to do, but that's fine. There's the video link right there. All right. So here it is. So this was just me doing a 100% parody of news. Parody news. So, basically a basis, a kernel of truth in all the news, but then I made it funny, or I tried to make it funny. So you'll have to let me know, Mario, if it was actually pretty darn funny or not. Al says, how did you buy it so cheap? Was it a long time ago you bought that Nvidia? Oh, interesting. And we got the Banana Bread Company. They come in with a $2 dividend, which is fantastic. I love this one. You received a dividend. That's fantastic. That, of course, goes right to the challenge as well. It gets us up to 2. But guys, we did need 4 for me to throw in the Friday show, but we got close. We got halfway. That's like it's like, can I do half a show? We'll have to see. Mario says, I will check out the link at YieldMax ETF, and Nvidia was at $30 this morning. Okay. Let's see. NVDY is not NVDA. All right. What's the significance of banana bread? I notice people always post emojis of banana bread on your live chats. All right, well, I'll tell you. My big expression is, if something is absolutely phenomenal, I will come out with the holy banana bread. That's where it comes from. And the funny thing is, just to go back in history, long before the channel, the original, I guess, genesis of holy banana bread. I was working at a call center with some folks, and in the call center you couldn't swear at all. So a lot of us and a lot of us different supervisors and such, we all had our own words that we used, and I just came up with, I was like, I want something unique. I love banana bread. And then I was thinking I thought about Robin, like from Batman and Robin, how he'd always be going, holy bat boomerang, or holy bat something. And I was like, holy banana bread. So it ties in the geekness with the fact I like banana bread, and it worked. Anyway, that's where it was born, and it stuck. It really, really stuck. And it's funny. I was watching a reality show once, and it was a show about they took a town and they put a bunch of kids in the town. So it was kids running their own town. That was the reality show. And this one little kid in there, a little boy, he was just like, holy banana bread. And I was like, really? Seriously? So it was the first time I heard somebody outside of me use it. And, now, of course, every so often I've heard Jill say it. She probably will never admit it, but I've heard other people. It catches. It's catchy. So anyway, that's what that's all about. Al says, okay. I misunderstood that. I thought it was Nvidia. There we go. There we go. Banana bread head. Yes. And that's what I will call, like, how if somebody's a real F head, I will say, you banana bread head. It doesn't sound as offensive, but And sometimes I say it as kind of a playful way too, like, oh my God, you're such a banana bread head. So, it sticks. It sticks around. We got a super sticker from the lovely Jackie. There we go, 3. And I can jump ahead here and say the Banana Bread Company has thrown us another dividend. So we got a show on Friday. We got a show. You guys came in at like the last minute. It's like, yeah, let's get in here at the last minute, and we're going to make you work this week. We're getting 3 in total this week. It's fantastic. I remember like in December when I was doing them every day. Plus I was doing 5 market closes. I was doing the this week, and getting all my videos out. So it's a really busy week, but it was fun. It was fun. I did love it. You guys are absolutely awesome. And the beautiful thing is with these here, I mean, these things only go about an hour. This one's an hour and 30 minutes, but hey, why not? Why not? Al says, I guess I should say holy burrito or holy fried chicken. Oh, there we go. We'll just keep saying them until we get them. We get one that we love. Yeah, Larry says, I wish I had 1,000 shares of Nvidia. You and me both, Larry. You and me both. There we go. Let's see. Yeah, 1K Nvidia would be Thexy. There we go. And a thank you. Yes, you're very welcome. You're very welcome, Mary. On your way out, folks, if you haven't hit that like button, just give it a good old hammer on the way out. And Larry says at AL monthly, but it's always different amount, and I'm still suspicious of it. All right. Okay, everybody. This has been a fantastic show. We're going to be back here on, Friday. So, yeah, absolutely. So, thank you to Mary, to Jackie, and to the Banana Bread Company for getting you guys another market close on Friday. So let's see if we can hold up the green for the momentum of this rate cut until Friday. So until then, everybody, take care. We'll see you again soon. Bye-bye.